Welcome back to Golden Rule Radio. I'm going to start this week's show by recommending that you go listen to David McAlvany's commentary on the McAlvany Weekly Commentary. Fantastic show, David. He hits a lot of points that are really pertinent to what's going on in the market with the dollar, the world chaos related to the dollar, gold. So go listen to the commentary this week. Today we have gold up $25. Today's Wednesday, and gold's up. Platinum's up $25, silver's up. We're having a good day with the metals. What do you guys want to talk about today?
Well, it didn't start that way. Certainly the metals had an initial significant drop. I'm sure, Miles, you plan on touching on that. What precipitated that?
Boy, that's an unfair question. Woke up this morning right at the 8:30 open, and gold's down $10, silver's down, the Dow's down, everything's down. The dollar was up, of course, because that tends to happen. And then as the dollar reversed back down, we've seen everything else come back up. Now, gold's putting in some newer short-term highs. The Dow, obviously, after the pretty big fall off over the last week or two, is still taking some time and has a little bit of distance to go to get back up to those levels. It will be interesting to see what the precious metals markets do over the next week. Not just the precious metals, but also the commodities like oil. You know, we look at some of the news reports coming out today. Crude oil inventories were released today. Expected increase of 2.8 million barrels. We only came up 1.8. We look at CPI numbers, which were also released today on the Bureau of Labor Statistics. Most of your energy sector has increased pretty dramatically. Energy commodities up, gasoline up, oil up, electricity actually down, which I find interesting. But beyond that, yeah, it looks like we're having pretty much a rise in just about everything but the US dollar. So I'd say it all revolves around the value and the expectation of government spending and inflation.
And when you say up, you're not talking about up a fraction of a percent. You're talking about oil, gasoline, those types of things up. They're up substantially.
Yeah, $1.58 just per barrel today on oil. And copper has basically erased all the losses that it had earlier this month, right back up into that bullish territory. So, Miles, I think you're right. The commodities in general are telling us something here, and that goes hand in hand with the CPI, with inflation concerns. And it's really tough. I did put you on the spot with that first question on purpose, but, you know, did gold initially drop because of inflation? Did it initially drop because of that little dollar rally, right? Or did it initially drop because of the fact that, you know, the euro was taken off and rallying? Who knows what ends up being the initial impetus? But what we did see was a very strong reversal. And yeah, we are up, 1.75% today in gold, to your point, Robert. That's significant. But actually, we're up 2.5% from that low, Miles, that you talked about putting in around that 1322 mark.
Yeah, you mentioned oil. Oil up 9.5% just month over month CPI. One last important thing to point out also is retail sales numbers are down.
Which is not surprising, probably.
Well, coming off the seasonal selling November, December, yeah, it doesn't surprise me either that sales are diminishing, especially since the cost of everything seems to be going up.
Well, before we leave the metals, silver is up 2% today. We're flirting with $17 an ounce again, and platinum up 2.8% today. It is on par and has actually passed palladium again. So that's actually encouraging for us as we've been recommending platinum. But palladium is up too, to your point, but it's only up 1.5%. That's what's narrowed that ratio, that platinum-palladium ratio.
Yeah, in the early morning dive in the markets, I don't know if that's as substantial or manipulative piece of news as it could be made out to be. And Tori and I were talking about this right before we started recording. You pointed out that over the subsequent minutes of that dive at 8:30 this morning, we did not have a V correction. Gold, specifically gold, did start stair-stepping up over the next half hour, 45 minutes. We did not see a very deep dive in and then a blast off back up, but it looks like we've had a sell-off, came into a price level where we had some standing orders, and people are getting behind this move. So I know about 3 or 4 months ago, we had a show where we talked about the anatomy of what a bear raid looks like. I don't think that's necessarily the case this time, because if that were the case, we probably would have had a steep V correction and we'd be seeing gold trail back off by the end of today, Wednesday, and probably over the next couple days. It looks like we just filled orders, and if that's the case, people holding your long positions in the markets, as well as people holding physical gold, should see their prices rising over the next couple weeks.
I agree, and that means that potentially that 1325 level, it just barely dipped below that for a bit. I mean, that's going to be a new support level, is it not? And one that actually should be very strong.
Yeah, I would definitely agree with that.
So the piece of homework that I gave you to go listen to David's commentary this week, I'm going to give you another piece of homework. If you're not on our email list, you want to be, because we sent out an email on Tuesday morning about an opportunity with St. Gaudens coins. We had good response to that email, and here we are literally the next day, gold's up $25. We had some people take advantage of what we were offering on Tuesday, and they just gained $25 an ounce the next day. Timing, coincidental, yes. But if you're not on our email list and want to be, we do send out occasional emails. And I think there's valuable information besides what we put out on these shows on those emails. So call us 800-525-9556 to get on the email list.
The primary motivation there, Robert, before we leave that is premium. So if you're interested in premium swapping and having us manage your precious metals holdings, that's what we do best. And to your point, Robert, can't do that if we don't know what you have and haven't worked with you.
Well, I think a lot of precious metals investors, too, may have a lack of understanding about the value of the rare coin market when approached correctly. A lot of bullion investors, a lot of futures, options, contracts, ETFs investors out there probably listening to our show. Don't ignore the value of owning physical metal, and don't ignore the value of owning the right physical metal based on relative price ratios within the market, as well as price ratios between rare coins and their bullion counterparts. So that's something we'll certainly try to talk about a little bit more, because we are always approaching what we think may be the next best opportunity. Like I said, silver, platinum, and good quality older US and European rare coins seems to be where the profit potential is today.
No, that's a great point, Miles. And I would say too that, we're not trying to turn anybody into a coin collector. This is about managing and advising you on premiums. Don't get married to these products. These are short-term gains for ounce accumulation strategies.
Yeah, for me, collecting is one thing, buying value is another. And we're doing this to buy value. We don't really care about the coin per se, in a sense. I know we do. Drew would probably be mad at me if I said we don't, because we do have quality products. But on the other side, I'm buying value. That's the reason I'm doing it. It's out of value.
So speaking of value, how about the white metals, Miles?
So getting back to the other value propositions in the precious metals market, looking at the silver price, we actually remain in that decreasing pennant that we've been watching. So I'm still expecting to see a pretty substantial silver breakout one way or the other. And my gut is leaning up, but we are still within that trading range, compressing down. Silver did have the same type of move as gold this morning, which we had the big drop off right at 8:30 this morning on Wednesday, and then we've had a kick back up since then. Platinum and palladium are following suit. Platinum is at the higher end of its trading range, so hopefully we may be seeing that next breakout here. Although platinum and palladium ratio, I think we're finally seeing platinum higher than palladium for the first time in a while. I know we hit 1-to-1 parity last week, and I think platinum is now sitting $5 or $10 higher.
So moving on from those markets, let's jump into the dollar, because I've said it the past few weeks, I'm really interested to see where we go from here, because I think the dollar is at a point where it could go either way. I really do. Euro as well, kind of the dollar counterpart. So we've bounced off this major 50% marker, also Miles' 618 marker. And what do you think? Are we going up? Or are we going down with the dollar? Does it matter? I mean, referencing David's commentary from this week again, he talks a lot about that the dollar and gold don't have to move counter to each other. They can go together, and probably will.
But something has to give. If the dollar and gold are both going up, the Dow's going down, or vice versa. Actually, I'm glad you brought up the euro, because I think the euro still has a little bit of room to go up. And if that's the case, I also agree that the dollar has a little bit more room to go down. I think we will have a bounce at some point here. I think the euro turns down. I think the dollar turns back up. I just don't think it's time yet. I think the dollar's coming a little bit further down.
Well said. Yeah, I would agree. I haven't really liked the action with the euro dollar pair. I've been watching it and trying to determine which way it's going to go, and it's kind of confusing right now, I'll have to say.
Well, the dollar is showing some strength versus some currencies in that dollar index, so it's not going down in every global currency. It's trying. I think 3 out of 8 it's actually up in. And so that to me is, to your point, Robert, yes, we're in this water slide type situation, but at some point it's going to level out.
Well, and for the first couple days this week, the dollar looked to be making a little bit of a rise, but this morning, and obviously as soon as it came into those price levels, I'll have on the short-term chart here, we saw a pretty strong kick down this morning in the value of the currency. That may have to do with the CPI numbers we talked about earlier, or that could just be trading pushing the price down. But I think the euro has a little bit further to go, and therefore the dollar's coming down a few more inches.
So jumping to the equity markets before we finish today's show, I think the key word is volatility.
Well, I'd say absolutely right, and that's why there is wind in the sails of gold, because uncertainty, volatility, lack of clarity, all of those things are really what, more than anything else, drives interest in acquiring gold.
Absolutely. And with gold above $1,350, we're only $25 away from the previous high and less than $50 away from $1,400. We're going there. We're going that direction. So here we are.
So the Dow, like most everything else, we had that gap open down to start the day off, and then I think we're up about 450 points on the day. So the Dow has had a lot of volatility since really the beginning of February, and even today, while comparatively a few 100-point move may not seem like much to the 1,500-point moves we had last week, we are showing some pretty aggressive ups and downs in the Dow, which is not the stability that Wall Street hopes for. And you can see that reflected on the VIX, the volatility index we talked about last week. I think the Dow has a long way to go to get back up to those previous highs, starting at around 25,200 is going to be your next real watermark for the Dow to push past and maybe hint that we're getting back up to the old highs that we were at prior to this previous correction.
Thank you guys for listening this week. We appreciate the support, the views, the shares, and tune in next week.
So as usual, if you liked what you heard, hit the subscribe button, click the bell to get notifications. You can follow us over at Twitter at ICA Gold. Give us a call, 1-800-525-9556, or head on over to our website, McAlvanyICA.com.
Thanks so much. Have a great week.